Hi, my name is Lee Arnold, and like you, I'm a fellow real estate investor. And I got started in this business when I had no money, I had no credit, I was struggling financially to make ends meet, and I was taught to go out and find REO properties. This is real estate owned. These are homes where the homeowner wasn't paying the bank, so the bank is foreclosed, and the bank now owns the asset, and now they're selling it off. So that was kind of my first introduction into how to find good deals in real estate. Well, as I went through the years, I discovered that one of the best places you can go to get great deals on real estate and get them quickly is at the foreclosure auction. Now, this is probably not news to many of you, but what you are thinking, well, Lee, I know that auctions are a good investment and that I should be buying there. The problem is I have to have all cash. My market says you have to have all cash, and Lee, I got no money. So how do I participate in these great deals if I got no money to bid? And it's a good question. I want you to write this down. Please make sure you're taking notes. I want you to write this down. And the term I want you to write down is equity deals. Now, the beauty of equity deals is you're still dealing with properties that are going to foreclosure. So this list is readily available. This list of all of the good deals that are available that are going to auction, which you could buy at the auction if you had cash. But since you don't, we're gonna do something that most investors never actually even think to do. And that is go contact the homeowner. Knock on their door, send them a letter, say, hey, Mr. and Mrs. Homeowner, my name is John Q. Investor, and I'm here to tell you, you don't need to lose your home to foreclosure because you have other options. Now, it's important that before you get in your car and start driving all over Tarnation to knock on doors of homeowners or send letters, you want to make sure that you check the title of the property to determine, does this homeowner have equity in the deal? Now, there's two questions you should always ask on any investment deal before you even proceed into doing any due diligence. And the questions are these. Number one, what is it worth? What is the property value? What are properties in that surrounding neighborhood going to sell for? So what is it worth? And secondly, what can I get it for? See, if the property is worth $120,000 and the homeowner owes $100,000, that's only a $20,000 marginal spread. That's not enough to make it worth your time from an equity deal standpoint. However, if the homeowner that's losing the property, let's say they acquired it in 1986, and they've not refinanced it, it's the original mortgage, they've got no seconds on there, and we determine that the house is indeed worth $120,000, but when we look at the title report, we see that the payoff on the underlying loan balance is only $50,000. Well, the difference between $50,000 and $120,000 is pretty substantial. That's a $70,000 marginal spread. Now, when this homeowner goes to the auction, let's say that this property does indeed go to sale, whether it be a judicial foreclosure sale to the trustees, or you're in a judicial foreclosure market, we're dealing with sheriff sales. Regardless of where it's at, when that property sells, if the bank is owed $50,000 and that property sells for $70,000, meaning if you went to the auction and bid it up, and you bid it up to $70,000 to be the successful third-party bidder, there's a $20,000 play of cash here. Now, what most investors don't tell the homeowners is that this $20,000 goes to the homeowner. So if you're going to participate in this strategy, I want you to make darn sure that you are communicating what is factual and actual to the homeowner, and that is, if there are overage proceeds, that $20,000 goes to the homeowner. So now you've identified what it's worth, you know what you could potentially get it for because you know what they owe, and you know what it's probably going to sell for if it goes to auctions. Most properties at the auction, in pretty much every market I've been to, will get bid up to 55 or 65 cents on the dollar of value. So we've got this list of homeowners that are about to lose the property, they've got equity, we're going to write them a letter, we're going to give them a phone call, we're going to go knock on their door, and we're going to structure for them a buyout agreement, which means if they're in arrears, say $5,000 or $10,000, we will come up with $5,000 or $10,000 to cure the arrears so that the homeowner will then transfer ownership of the property over to us. Now, here's where most of you just stopped listening. You said, well, wait a minute, Lee. If I got to come up with $5,000 or $10,000 to cure the arrears, I don't have $5,000 or $10,000. Well, guys, here's what I love about real estate. Real estate doesn't care about you. Real estate doesn't care about your credit. Real estate doesn't care if you've got any money whatsoever. all real estate cares about is that you have a good deal. Now guys, if you have gone out and found a homeowner in default who's willing to sell their property to you for $70,000, they owe $50,000, they're $5,000 in arrears, and if we can come up with the $5,000 to stop that foreclosure auction and give them $15,000 to move out, go away, we've just purchased their property for $20,000 out of pocket. We're going to take over their underlying mortgage of $50,000, and we've just bought a $120,000 asset for a $20,000 outlay of cash. Now here's the good news. This $20,000 outlay of cash doesn't have to be yours. You see, in real estate, when you have a good deal and you have written it and you've put it under contract and both parties have agreed to these terms, you now have something that is very attractive to investors. And if you will invest the time to go out and find these great deals, these properties going to auction, make contact with the homeowner, structure a good investment opportunity for the homeowner as well as for you, you're not going to have any problems coming up with the capital necessary to get the transaction closed. So, pre-foreclosure, one of my favorite strategies. You approach it the same way you would if you were going to go down and bid at the auction. You can find them simply by picking up your local newspaper and looking in the legal notices section. It'll have all the foreclosure information there. It'll show you the date of the mortgage. It'll show you the name of the homeowner. It'll show you the property address. And you can just read right down the column and find out exactly where it is, what it is. You can go to Zillow or Trulia or Redfin or one of these online internet valuation services. So between the legal notices in the newspaper, which are also available online, by the way, and your access to value in those markets, you now can determine what is it worth, what can I get it for. Now, once you've done that, the next question you have is, well, Lee, okay, I can find the leads, I can make contact with the homeowner, and I'm a little hesitant about writing the whole offer thing. What do I do if I need to write an offer? Well, here's what I'm going to do for you. If you get to this point, you've found the lead, you've identified the homeowner, you've negotiated the terms of the deal. I'm not saying I'm going to write the offer for you, but I am going to offer you some assistance so that you can make sure that we see this deal to fruition. Call my office. The number is 800-341-9918. Again, 800-341-9918. I want you to talk to one of my funding specialists, okay? Tell them the terms of the deal that you have, and they will make sure that, number one, it is a good deal. Number two, that you have structured it properly. And then finally, they will give you contact information in your local market as to where you can go to have somebody help you write the offer, help get you placed with a local investor that can help you kind of put the deal together and take it to fruition. But guys, we are here to support you in any way that we can. All we ask is that you do some initial work. You put together some initial due diligence, you go make contact with these homeowners, and when you need us, we're here to help you. 800-341-9918. And remember this term, equity deal. Equity deal. Now, in this segment, I told you how to take advantage of the equity deal in a pre-foreclosure situation. In the next segment, I'm going to teach you how to take advantage of an equity deal that's not in foreclosure, which is actually even sweeter than the first. So stay tuned for the next segment.